Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, and I'm recording this, as usual, late Friday morning on December 2nd. So as I record this, the indexes are about flat this week. It depends what you're looking at. We had a kind of quiet beginning of the week. We had the big rally after Powell talked, and then today we're down some on the strong jobs report, which is negative, so to speak. So overall, not much different. And honestly, if you kind of went away a week ago and came back right now and just sort of looked at the top-down indicators, nothing's really changed. The intermediate term trend up, longer term trend still down, broad market still unhealthy, growth stocks still generally underperforming, that sort of thing. I will say, if you are watching things on a day-to-day basis, though, it certainly looks like things are improving, just not quite enough to really conclude that, there's an all clear. Like, the S&P, for instance, in our long-term model, not to get in the weeds, but we use like a 35-week moving average. The S&P is above there, but the NASDAQ isn't. So the long-term trend, no green light. The number of stocks hitting new lows, which is one of our favorite measures of sort of the selling pressures on the broad market, that has dried up nicely. It was actually very low yesterday. Today it's not so bad. But it hasn't dried up enough and consistently enough to conclude, the sellers have left the building. Growth stocks, I'm seeing more tightness, more proper action, but, few are really letting loose on the upside. So it's kind of one of those close but no cigar things. But, in the video, I think it was the one right before Thanksgiving, the last one, I said, hey, I think the next couple of weeks will be key. And I still think that. And I think we've seen some under the surface improvement. And really, it's just a matter of, can we go into next week or two and really see some things let loose on the upside, break out, hold their gains? We're seeing some of that, certainly more of it than we've seen in a while. It's not widespread, and some of it's kind of thinner names, but we are seeing some improvement there. So now it's just whether the market can build on it, shrug off some bad news or some strong economic reports and go from there, okay? In Cabot Growth Investors Model Portfolio, we did a little buying this week. We're still about 70% in cash. In top 10, we have what's called the market monitor, which is kind of a quick and dirty, market view. And that's at a 5 out of 10. Of course, top 10 more, really just goes wherever. So financial stocks are doing well, that sort of thing. But either way, I still think, holding some cash, smaller positions, buying on dips, that sort of thing makes sense. I wouldn't be going out and buying 5 breakouts today, or not that there are 5 breakouts, but I wouldn't be doing that yet. But I still think the general, whatever the cash level or whatever, the general view of, smaller positions on dips, maybe selling a little bit on strength, but just keeping in tune. I think if the market can just kind of keep building on this, then the longer things stay intact, the longer the intermediate term trend remains up, the more things that will begin to participate, and we might be starting to see that now, okay? So let's hop into the charts. As usual, I'm using MarketSmith, program from Investors Business Daily. You can learn more at marketsmith.com. We'll start with the major indexes here, get my notes up. Here's the NASDAQ. It's still lagging. Okay, you can actually see this blue line, this thin blue line. Let's see if I can get this thin blue line right here is the relative strength to the S&P. So you can see it's still kind of scraping close to new lows relative to the S&P 500. So it's still underperforming below the 200-day line, but it is starting to act. It's kind of had this bottoming area, leapt up here, held moving averages, leapt on the Powell comment. You can see today so far, we'll see what happens, is no big deal, at least to this point, in terms of damage. And the other indexes are all still positive on an intermediate term basis too. You can see the S&P, I mentioned this, kind of toying with the 200-day moving average, well above the 50-day, which itself is turning up. You look at IWM, Russell 2000, these things have lost a little bit of relative strength here, the small and mid-cap names, but still act totally proper above the moving averages. MDY, just running through the indexes here, okay, sitting, really holding above the 200-day line. And same thing with the New York Composite. So we are getting more and more stocks in the broad market to, get above some of those moving lines. We'll see how it goes, okay? But like I said, if I just go back, we need sort of the S&P and the NASDAQ to really get above there. In our system, the 35-week moving average, and it hasn't quite done that yet. Like I said, the number of new lows and things like that, not quite there. We're also still seeing, to this point, it can change, but this is the XLP, and I mention this most weeks, and we're just still seeing leadership among really the most defensive names. Other things are kind of perking up a little bit, like I said, and I'll show you those, but I'd love to see this. I'm not saying I want to see this thing fall 5 points in a day or anything like that, but I'd love to just see this kind of hover down, go sideways in the growth stocks or some more aggressive, risk on stocks come to the fore. To this point, this is still basically outperforming the market, or at least performing equally to the market and outperforming those risk on stocks. Okay. Now, on the more positive side of things, I am seeing more, and I think I mentioned this a week and a half ago on the video, just more proper action. This is, you can always find one stock, but this is Insulet. It had this big, 210 to 320 in a few days, right, including earnings. And then it's just kind of like, over here you kind of had these moves, and then it just kind of starts to fall apart, right? So far, this is pulled back, but instead of kind of coming unglued, very tight in here. You can see on the weekly chart. And as I go through some of these examples, these are some of the names I'm mentioning. So, 3 weeks tight here on the close. You can see before this week, now it's starting to perk up. This, of course, it was a holiday week, but you can see how low volume was down there. I don't want to get in the weeds, but, this is just stuff you look for. And now volume's picking up a little bit. Doesn't mean, the question is, does this, perk up here, come up here, and then get rejected? That's kind of been the story of the year. Or can it just kind of hold itself together and have the sellers kind of run out of ammunition? Just seeing more action like that. Even on a name like this is AXON Enterprises. It's on my watch list. Mentioned it before. This is the old Taser, the new Taser. It's the same company. Kind of broke out a few weeks ago of this low level base, or whatever you want to call it. Went vertical. Looks pretty good. Looks very good. Up every week. And then again, just look at the last few weeks. The stock's had a big move. It could easily pull back if it wanted to, especially during some of these ups and downs in the market. And so far, just very, very tight in here. And not just closing tight. Everyone talks about tight weekly closes. It's the range. Again, it was a holiday last week, but the ranges are nice and small, which tells you, it doesn't take a, chart genius to just look at this and just see the stock do this. And it's basically just chilling out sideways here for a couple weeks. Again, no guarantees. Maybe it comes in next week and gets hit. But so far, I am seeing more stocks kind of act properly. Then you have sort of the less intense rejections. This is Enphase Energy, which is having a good day so far today. We'll see what happens. But, it keeps trying to be rejected, or it was rejected here in the 320 area, give or take. Just day after day after day, really, just boom, 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 boom. But you can see, whereas this first one led to a pretty sharp dip, the next one really only went down for a day. And then it kind of went back, and then it had a couple of days. Then it went back and it had just a couple of days. Still held this 25-day green moving average, and today it's trying to break out. We'll see what happens, at the close. But so far it looks pretty good, okay? And then we're also just seeing stocks that are kind of respecting moving averages. So this is Schlumberger, which I find interesting that the oil service stocks, generally speaking, look totally fine, even though you've seen oil come down, whatever, recently, and natural gas has kind of come down some. But so far in this, this orange line is the 10-week line. It's a weekly chart, so 10 weeks is like 50 days ballpark. And you can just kind of see it's adhering to that. It's not just sort of plunging below it and coming back above it. That's kind of more proper action. And the reason you want to see proper stuff is it leads to good things usually. But it's a sign that institutions are kind of more in control. It's not just people in there whipping in and out of stocks, okay? Another example would be, this is sort of a shorter term example, but this is Biogen. Now, there was some news in here this week. This was the new, it had the drug trial release. It's come back and it's acted well, kind of marched higher. And it had a shakeout here this week right to the 25-day moving average. Nothing magical about 25. Some people use 21 and all this, but we've always used 25. It comes right down the 25-day line, pops higher the next day. You can say it's because of news, but I'm just seeing more action like that as opposed to things, whip down here, then it bounces up, and then it gets hit again, that sort of thing, which is a positive, okay? Now, with that said, just to play both sides of the fence, just to give you all the evidence, there are still, not just among, earnings movers, but this is Shoals, SHLS. Solar still looks good. We just looked at Enphase. First Solar looks good. And Shoals had a great, it's definitely a smaller name. You can see it's more volatile. But it had this nice little higher base, held above the 200. You can see it respected its 40-week moving average on this chart. You can see how it held this 200-day line, just respected that. Then had a huge earnings gap and a little bit of a follow through. And then, it pulled back this week. And then all of a sudden they had, I don't even remember, it was some sort of CEO news. I don't know if they're stepping down, and then a big share offering. And the stock went kaput. Now, share offering, again, it's kind of a unique situation, but you are still seeing some of these accidents, as I like to say, in some of these charts where it's kind of a breakout, and it looks pretty good for a week or two, and then next thing you're hit upside the head with it. That's why I still think small positions, preferably on dips. Don't get me wrong, if you bought this dip, you still got hit, but at least you weren't piling in with a huge position, up near the highs, So at least if you're taking a shot at these, you're keeping it small, stuff like that, okay, going forward. And then I mentioned the XLP again, just in terms of you'd like to see defensive stocks. Our aggression index, which I can't pull up on Wanda, but basically NASDAQ versus the XLP is scraping sort of new lows here, or at least, close to it. So you'd like to really see that perk up, and maybe it does, but that's going to be key going forward, okay? So a lot of those stocks I am watching. Another batch here, Five Below. It's got a great long-term cookie cutter story. We've been following it for years. We owned it a couple times and did pretty well with it. And you kind of see it had almost 3 legs down in here, bottomed out, and it's just been kind of grinding high. It's not one of these names recently that's been like, wow, look at this stock, it's up 20. It is this week, but it hasn't been like up 20%. Oh wow, look at this. It's just been kind of grinding high. You can see relative to the market, it's been outperforming. And then this week it did report earnings and pop higher. It's not out of the woods. There's old overhead, so on and so forth. And again, make your own decisions, but I wouldn't be, chasing a ton of stuff higher. The way I look about chasing some of these things is if you're looking at this and you're like, I don't want to chase it, and you end up being wrong and the stock takes off, chances are that's one of a few signs of a change in character. In the market, it's a good thing overall. So I'd kind of rather, just be a little bit late on that front. In odds favor, of course, it will take a rest here given the environment. But anyway, Five Below does look good. Looks like it's clearly coming out of its downtrend, well above all its moving averages. So that looks pretty good. Celsius, CELH. It's funny, some of these names, not all, but you had a lot of names, some names, that got killed. They bottomed out in March, April, May, June, whatever. And then they had big, really noteworthy rallies. Not like they did this and then they did this in the summer, but they did kind of this and they came all the way back, okay? And that's like obviously what Celsius has done, or it did back here. Now it kind of forms this sort of base within a base, or a base on a base, whatever you want to call it, which is usually a pretty good sign of strength. And as of a few days ago, it got hit from the century mark, and you kind of think it was going to get, go poof, but no, it held up pretty well. Obviously now it's threatening its old highs. This is one where it's always a volatile stock. You got to know, on a daily basis, the thing moves around like 6 or 7 points a day, and it's only $117. So there's a lot of volatility there, but just looking at the big picture, it is a name on my watch list. The growth, the story with Pepsi, some volume coming in here a couple weeks ago. You'd like to see it settle down, but either way, I'm just flagging it as something that looks good. Another kind of example of this, not as strong, is this is Shift 4. I do like this story a lot. But you can see, actually, let me go back to the weekly chart. You can see it got nailed here, and then it had a nice earnings reaction, and it's really just, it set up this shelf, and it just seems like it wants to get going, but it never, it can't quite yet. And it's all over the place. So it had this big shakeout, came all the way to new multi-month highs, not all-time highs. And then it went from, 54 to 42 within a week. Interestingly, though, not a ton of volume there, and now volume's ramping again, and the stock's trying to, perk back up above 50. Again, you'd like to see it almost stretch its legs and just take a week or two and chill out. Maybe this is one of those names. I'm totally spitballing here, but maybe it has a move and then settles down, and maybe it's, January 1st type thing. We come in next month and it's really set up nicely. But I like the story. I like the resilience. It seems like it wants to get going. It does have good volume clues. It does have good numbers, so on and so forth. But you just kind of need to hopefully get a little bit better entry point. Chip stocks are a mixed bag, just to show you. They've been sort of a nice comeback here. Now they're kind of battling with a 200-day moving average a little bit. And some names are just all over the place. I've mentioned onsemi. It looks okay, but this is just, again, with the 77 to 67 or 68 within a couple of days and then back, it's just all over the place. So you'd like to see it tighten up. But some names look pretty good. One is this ASML, which I think I've mentioned here. I definitely wrote it up in Growth Investor a couple issues ago. It's not technically positive momentum. I mean, you could argue it is, but just kind of, except for this one little shakeout, it really bottomed, a few months ago. It's been living above the 200-day line. And again, on the weekly chart, you can just see it's a $600 stock, so it's not going to be quite as volatile anyway. But you can just see how it's been pretty tight in here, really almost 3 weeks closing tight. Volume's been drying up. Daily chart, basically the same thing, right? It's just holding right in there pretty nicely. So that's one. And then Global Foundries. Now this one it's kind of, your classic example recently where it's like, oh, it has a nice run, looking pretty good, pulls back sharply. So I don't know, maybe it just melts away. But so far, if you look at the weekly chart, don't get me wrong, not the best week right here. But if it can kind of hold up in here, this does kind of, to me, look like, again, another little base building effort in the chip sector. So chips are kind of a mixed bag. PI is another one I've mentioned that looks really good, kind of extended in here. But chips are a mixed bag. A lot of them are kind of dead and buried, but there are some sort of newer names, or I guess ASML is an older name, but there are some names that are acting pretty well, okay? Inspire Medical, I mentioned this in Growth Investor. It still has work to do, but it looks like you can kind of see it got hit here early last year with growth stocks, then rallied into the market peak. It held up for first few months of the bear market, then finally got hit in the spring. But that was the low, and it's kind of etched a higher low, and it's just kind of marching back. Nothing fantastic about it. The one thing I would say on the weekly chart is if you look at this, again, the relative performance line, it's not far from a new RP peak, which is a kind of a nice it's a nice tool to use in this sort of environment. Anyway, multi-month highs, cranking up, big, new product for sleep apnea that's catching on quick, so that looks pretty good. I will mention Academy Sports and Outdoors. I do think the group looks good. ASO, the stock, again, tagged new highs, pulled back a little bit, but not, hasn't unraveled. It does have earnings next, the 7th, which I think is Tuesday, if I'm doing that right, maybe Wednesday. So anyway, it's got earnings next week, so we'll see what happens. But if the stock can report something pleasing and kind of thrust higher again, that would look pretty good. A few more names just to run through. I got a lot of names. It's not, it's just working on the top 10 list. There's quite a few names that look pretty good. Etsy, obviously a huge turnaround story, not a huge turnaround story, but a turnaround situation. Got destroyed, rallied, again, etched that higher low. And now, again, you're kind of seeing it this is interesting to me where, it's not my favorite. I'd rather have something totally fresh, but, tried to hit new highs, pulled back, but again, didn't pull back much. Steadied itself, and now it is kind of letting loose on the upside a little bit with some volume. So that's an interesting chart. CROX, kind of a similar pattern where you had, a huge decline. Come on, market. There you go. Huge decline, higher low. And then as of a few weeks ago, really broke out on great volume and followed through on earnings. And so far, the pullbacks have been calm, cool, and collected. Who knows? Maybe the $100 level will be a little resistance or something, but CROX looks pretty good. I just want to mention ALNY. This is ALNY Lamb Pharmaceuticals on the weekly chart. It's got it's losing money. It's not really my cup of tea personally, but what the hell do I know? Nice gap on this, and it's kind of got this nice little cup with handle if that's your thing, but nice little base. Again, tight action in here, just things kind of tightening up a little bit. Maybe the sellers are worn out. They've moved on to other stuff. We're starting to buy Christmas. They're worried about real life. They're not trading in and out of things. Nice volume dry up, and then this week a nice volume pickup as the stock is trying to get moving a little bit. And then last but not least, I know I always say this when I talk about these stocks. I know Chinese stocks. I get it. I know all about it, all the risks and stuff like that. And this is PGJ, which is our kind of favorite ETF for the group in terms of it's basically all listed ADRs here from China. It did have a big shakeout here a few weeks ago, but this thing has come storming back, and you're starting to see some names like Trip.com, which is the old or the new C-Trip, basically. You can see it's still all over the place. I mean, look, 30 to 20, back to 30, and then pulls back 25. But it is starting to, on the weekly charts, I did notice a few of these names kind of get going on the upside. Good volume this week. Pinduoduo was probably the big performer this week on earnings. Big companies, $120 billion market cap. It's not like you're talking about some tiny EV maker in China, So it does have some sponsorship. 1,000 funds own shares. Las Vegas Sands, which of course is, American, but their whole business is over there basically and in Singapore. It just seemed like it tried to get going a few times. And the last time it tried to get going, it did pull back, but not much. And now it's again thrusting higher on good volume. So, back to the overall market, it's good. Okay, it's still where it's at in terms of intermediate term trend up, longer term trend down. There's not a lot of money being made out there. There's not a lot of stock envy, in terms of stocks that are just taking off on the upside. It's like, oh no, I missed all these great stocks. There's really not that going on. So I don't think there's a huge rush At the same time, I do think it's fair to just say if you're being unbiased and not listening to the news or whatever, there's definitely some improvement in the evidence. There's more stocks that are acting properly. Can that change come Monday and the Fed destroys things? Maybe, but it does start to see like the Fed is, the market's starting to look over the horizon a little bit. The Fed's not going to hopefully destroy the economy, and maybe the tightening cycle ends and all this stuff. We're starting to see more proper action, more things participate, more things start to break out. And really it's just a matter of whether we can build on that or whether the sellers really reemerge here during the next couple of weeks. Right now, I'm optimistic, but it's cautiously optimistic, kind of slowly extending our line. Okay, that's all the time I have for today. Thanks for listening, and as always, come by again next week for another Cabot Weekly Review.